This is lesson number 6. I'm Masuood Ahmad, your accounting teacher, and today's topic is accounting equation. It is very important topic, and listen each and every word carefully. And particularly this video is designed for O levels, grade 9 till 11, and AS level as well, means A levels. So through this picture, I want to pour the concept of accounting equation in your mind, that is like a weighing scale. So both sides are always equal. Mean if you put assets of the business on left hand side and as capital and liability on the right hand side, it will give you always equal result. If they are imbalanced, mean we have made some bookkeeping mistake, and it should be like assets should be equals to our capital plus liabilities. So let's see in detail. So what is accounting equation? We can write it like value of assets are equals to value of capital plus liabilities. You can simply write it as assets are equals to capital plus liabilities, and capital, this equation will always remain equal. Say you have $80,000 assets, and the sum of capital and liabilities is also 80,000. So this equation will always true from the very beginning till the very end of the business. So another name of capital is equity. You may replace the word capital with equity. Equity is also same like capital, as we have already discussed in our previous lessons. So boys, assets are equals to capital plus liabilities, and you can write it like capital is equals to assets minus liability. It's a simple mathematics, no big deal. And if you want to find out the liabilities, and what could be the formula, like this, it could be liabilities are equals to assets plus capital and capital or equity. So if because in this equation there are three things, and if two are given, you can find it out very easily, the third one. So let's practice some calculations, and we have taken here one example. That's if you have started business, say on 1st January with cash 10,000 and vehicle 6,000, and how your equation looks like. So you have poured two assets into your business. One is cash and other one is vehicle. Altogether they are 16,000, and your capital is also equals to 16,000, because this 16,000 you have given to your business. So business is a separate entity, and they will write them like they got assets and the capital. So here your assets, cash and vehicle are there, and on the other side of the equation you have capital, but not right now you don't have any liability. So your financial impact on your equation is your cash will increase 10,000 and your vehicle is increased by 6,000. So altogether assets are 16,000, and on the other side of the equation you have capital 16,000, which shows that the owner of the business has given to the business 16,000 worth, and that worth is in shape of cash and vehicle. So let's do another example, another transaction, that is business has deposited 7,000 cash from the office, cash till to the bank. So what could be the impact? The impact would be on the asset side only. There isn't any change on the right hand side of the equation, that is capital liability, but the slight change has occurred on your asset side. For example, your cash will decrease by 7,000 and another asset will emerge, that is bank. Let's see. Here it is. So your bank will emerge on the asset side. Now you have three assets. One is cash, other one is vehicle, and last but not the least, that is bank. So the effect of the above second transaction would be like this. So cash was in the previous transaction was 10,000. Now when you have done your second transaction, your cash will decrease by 7,000 and your bank will increase. So as a whole, there isn't any change in assets value. They will remain 16,000. 3,000 plus 6,000 plus 7,000, that is 16,000. So let's practice. It's for you guys. You have to tell me if your business has taken bank loan 8,000. How does it affect your equation? So one thing I want to clear you, that when you got your bank loan, banker will not hand over you the cash but deposit the cash into your bank account. So what could be the effect? So I am giving you 4 or 5 seconds and you just guess it and I will answer later on. So I hope that you got it. Wonderful. And what would be the effect? That your asset will increase, your bank account will increase by 8,000, and same with the same value your liabilities will also increase, that is 8,000. So your business portfolio is increased, mean your increase in asset side and increase in capital and liability side. So your business is like have now have more value than before this transaction. So second impact. Now this is what the third transaction is going to do with our equation, that our bank will increase. I have bolded it for you, and liability is also increased. So total assets and liability looks like that. Assets, on the asset side you have cash 3,000 in your office, and motor vehicle value, that is 6,000, and now your bank will increase from 7,000 to 15,000 due to that loan. On the right hand side of the equation you have 16,000 in your capital account, and beside this you have owed to someone, that is bank loan, and your liability is also increased by 8,000. So your equation, your business portfolio, as I was saying to you, that is now not 16,000 but 24,000. So 24,000 assets comes from capital plus liability. Liabilities are 8,000 in 24,000 value, and 16,000 is contributed by the owner of the business. So it's for you guys, and you have to fill it up and give me the answer on my WhatsApp number, and here it is. So question number A is this, that you have given 40,000 worth of assets, and on the other side of the equation, I must write equation sign over here but I have forgotten it. So capital and equity is 30,000 and your liabilities are missing. So total assets are 40,000, and among these 40,000, 30,000 is your capital, and what would be the value of liabilities in this case? So you have to answer. And then B is there, 50,000 assets are there, capital is missing, but your liabilities has been given to you, that is 25,000. And what would be the value of capital in this case? And here in C, assets are missing, but the contribution by the owner, that is 35,000, and liabilities taken by the business is 10,000 is given to you. You have to answer what would be the value of your assets. And here is a bit technical question for you guys, and that is D. Your assets are not given to you, but among from the capital and liabilities, only the capital is given to you and liabilities are also not given to you. Here we have two missing things among three, and we have to find it out, but we have been given a clue that the capital is 60% of the total either assets or either capital and liabilities, and what could be in this case the assets and liability. You have to think over it. Okay boys, I'm not going to give you any other clue. And same goes with your part E, and you have to answer it. Okay, I will be waiting for your reply. So let's recap. Assets are equals to capital plus liability. Just you have to memorize this. It's very simple, it's very easy, and this equation will always true from the start till end. And if it is not the both sides are not equal, mean you have made some mistake. So you have to think over it. Assets are equals to capital plus liabilities, or capital is equals to assets minus liabilities, and liabilities are equals to assets minus equity. Okay, once again there is assignment for you guys from book, and I have shared the page of that book to you. You have to read chapter number 1 and page number 7 here, and that is you have to solve two questions, question number 2 and 3 here. Nothing for reading, but review question is given to you, question number 2 and 3 boys. Okay, inshallah, see you in the next lesson with accounting, with the transaction analysis, and that would be very important lesson as well. Okay boys, till then, thank you very much, and have a nice day.